If you invest today, even with no predictions of up and down economy, you're likely to make, a couple percent a year for the rest of your life. You're not going to be able to retire. Well, no, they choose what they want to hear. If you're in a boom and you're invested in the boom, I mean, everyday people didn't used to have so much money in stocks. It was more in real estate. And real estate does not go down like stocks does. Real estate is more stable even when it goes down. And everybody now has to root for this thing to keep going. And so they'll listen to the people that say, oh no, don't worry about this. Don't worry about debt levels. Don't worry about demographics declining, which they're declining at the speed of light in all developed countries in the world. Somehow the government will bring us out of this.
So Kim, we got, hey, Harry, we're the new age men. We're going to give the
woman. And so we're not going to be listened to until we're right, and then it'll be too late. That's my point.
Well, I got two comments. And to your point, Harry, of course, if you're vested heavy in the stock market, you only want to hear that the stock market's going to keep going up. That's what you're going to pay attention to. My question is then, you're on the demographics of the baby boomers. They went at their peak in 2007. What's the impact of millennials? Are they going to have
The millennials bring us up through natural causes instead of printing money from 2024. And I'm very precise about this. I said from the beginning, the baby boom thing was going to peak in late 2007. I said that in the 80s. That's how predictable people earning and spending money as they age are in generational surges. And the baby boom was a big surge. So of course, a great boom. So we've been down ever since then. The millennials do not bring the upward natural momentum until 2024, and they will peak by 2037, much shorter boom than the baby boomers.
What was it? Boomers were like 46 to 64 was a boom generation. There was a Gen X behind us?
Yes, okay. Let me be more precise.
Gen X, because let's
First
go.
Turned up noticeably from 1937 into 61. That's the rising baby boom, which on a lag, predictable, quantifiable lag for peak spending at 46, moving towards 47, would have given us a peak in late 2007. I've been preaching that since the 80s. And people back then were saying, Harry, you're crazy. The US is done. Asia's taking over. Japanese make us look like idiots, And I'm like, yeah, they're growing and they're going to grow longer, but we still have the greatest baby boom in the world, and we're going to have the greatest boom in history until 2007, and then it's going to collapse.
Who is Gen X and what's their challenge now? Because that's a large generation too. Not a large.
Gen X is the declining birth rates from 1961 into 73 to 75 that caused the slowdown from 2008 still into 2022-23 before the millennials born after them take it up. And even the millennials, here's the important point, and nobody gets this, okay? Even the millennials, with their spending power as a smaller generation, less long in birth, only take us back to where the baby boomers took us. We only get back to even adjusted for rising productivity. We will never see a boom like 1983 to 2007 again in the US, and most of the developed world will never, and Europe's already behind us.
Okay, so
that's the truth.
So my question is, what's going to happen to Gen X? Because they're the sandwich, they're sandwich right now. They're the spread.
Well, they're causing the slowdown, but they kind of benefit because when asset prices go down, eventually, which they aren't yet, the government will let, when they do finally crash, they're going to be able to invest at more reasonable prices again and be able to invest for retirement. I tell you, anybody right now in the markets, whether it be bond markets at the lowest interest rates ever, long-term, or stock markets, the highest valuation, if you invest today, even with no predictions of up and down economy, you're likely to make, a couple percent a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again.
Okay, look.